Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts, like the chart behind me, which is of AMC Entertainment, ticker symbol AMC. And so here I am recording this on the evening of Monday, October 14th, after AMC closed at a price of $4.12, being down about 1.2% on the day, or 5 cents, and being flat in the after hours. And so in this video, I didn't really necessarily want to go over the chart because I will do that either Friday after the close or over the weekend this week. I just wanted to go over a call option that I find to be pretty intriguing. And I just kind of wanted to explain my thesis to you guys. And kind of similar to how I did like daily follow-ups with the Tilray calls, I am probably not going to do that on a daily basis, but probably on a weekly basis, going to do follow-ups on this AMC call option that is pretty intriguing to me. And so I just kind of wanted to explain my thesis with it, kind of some issues that I do have with AMC calls. And, one thing that I am going to do is, I'm probably not going to edit this video too much, but one thing that I had wanted to do was make my cursor bigger. As you can see, it's purple with a yellow outline. I wanted to make it a little bit larger, but I forgot to do that before recording. So you'll have to let me know if you do like the cursor being, I adjusted the contrast of the display, not the size of the mouse. So 1 second. Now it should be a large. You can see that a little bit clearer. So you'll have to let me know if you do like this. But anyways, I did not want to necessarily go over the chart, but just wanted to explain my thesis with this call option, kind of a more casual video as, I have been learning a lot using unusual whales lately. And, I've been learning how I trade options well, how I trade options poorly. And I think this is a really nice example of a call option that I think will be printing over the course of the next 8 months, sometime between now and then. And so, I just wanted to talk about that. And so my thesis is effectively, which I have gone over in the AMC videos, is that there is this, gap to the downside at $2.91. There's this gap to the upside at $6.85. I know I've got a lot of, lines drawn up here, but we have been residing in this range between about $4 a share up to about $6 a share. And so, it's been pretty boring, I must say, since the May squeeze that we saw. It's been really boring holding. And so I think that there's been a lot of theta decay with options. But since it has been, 5 months since we saw this big move, I think that we could be seeing a big move in the near or not so distant future between now and June. And so I think that I'm being pretty conservative with June being the expiration. I think between now and then, price will be going up higher. And so I think the premium on these contracts will be going up higher. And so I just kind of wanted to go over that. And, like I said, these gaps here, pretty cool with a pointer there, at 291. I don't think price is going to go down to 291. I don't think that gap's going to get filled. But if it is to get filled, premium of these contracts will be going down. And, so then I will just be dollar cost averaging, building up a larger position over the course of the ideally less than 8 months before we see a next, big move like this. And so with that, I see this gap to the upside right around $7 a share. I feel like it's very reasonable to think that sometime over the course of the next month, the price of AMC will be going around $7 a share. We saw this kind of like squeeze earlier in the year going up to over 1143, hitting a high during market hours of, 1188. And so I could see price going up there, but really I am just basing, this trade, this thesis based on these gaps, and that I think that price will be going towards $7 a share, if not higher, in the next 8 months. It may come lower. I would just get my average down. But, with price being $4.12. It is much closer to $2.91 than it is to $6.85. And so I think that now is the time when there is the most upside potential, whether it's for the stock or options. And so in my Friday video, I will go over the stock price. In this video, I wanted to go over this call option. And the option that I am talking about, which I'll go over a little bit of the details in Unusual Whales, that is, and I'm actually going to remove the moving averages. I think it just gets it a little bit cluttered. But what I'm looking at here is the $8 strike expiring June 20th of 2025. So that's about 8 months from now. This is a call, and it's currently trading at about 50 cents a contract, which represents $50 per contract. And, that's because the contracts represent 100 shares. So 50 cents times 100 shares equals $50. And I have to say the reason why I'm looking at something that expires 8 months from now is because, in all honesty, I don't really like looking at options data, whether it's AMC, GameStop, whatever it is, if there's a big retail kind of squeeze movement behind it. I feel like a lot of people crowd into short-dated, very out-of-the-money calls that end up expiring worthless because a lot of people are hoping for a big move like this. So going from about 50 cents up to the high here on May 14th was $6.50. So that's, $650 per contract. So I'm just going to pull up my calculator app here so I can calculate this. Let's see, $650 divided by 50, that's, a 13x. So 13 times $50, 650. So that's a pretty massive move. And so I feel like a lot of people just end up doing like short dated calls with very high strikes, very out of the money, and they end up going worthless. So I think it's like, kind of a bad practice. But this expiring in June, 8 months from now, I feel like it's very, very reasonable to think that AMC could be going up towards $8 a share with this gap here at $6.85. Price doesn't even have to get to $8 a share for these contracts to go up in value. They just have to go towards $8 a share. So with this gap here at $6.85, that is my thesis that over the course of the next 8 months, I think this gap will be filled. And with that, I think the call option for AMC with the $8 strike will be going up from 50 cents per contract. And so I actually bought a contract today, just one, so nothing too crazy, at 55 cents. And I do have a buy order placed for 50 cents for one of these contracts. It hasn't been filled yet. But, that's kind of my thesis, that I will dollar cost average, build a larger position with these calls, and that sometime over the course of the next 8 months, I will swing them for a 100% swing, a 2x. And so you might notice that I do have this alert set here. Let's see, get the cursor over there. You can see that at 66 cents. And so what is 20% of 55 cents? That's 66 cents. And so I don't have a limit sell at 66 cents. I just have this alert. I actually do have a limit sell placed at $1.10, which is a 2x of 55 cents. And so that's my thesis, that over the course of the next 8 months, while this might bleed as it has bled following this big spike in May, it has just been steadily coming down. I think eventually we're going to see another big spike like this, but I don't know if it's going to go to 650 because this was more than a year in advance of the expiration of the contract. Over the course of the next month, 8 months is when this contract expires. So I don't know that it's going to get to $6.50 again, but I feel pretty confident it's going to go to $1.10 or 2x whatever my average is as I do dollar cost average, as this does head down. And we can see that the low that was hit on the 10th for this contract was 50 cents. That was also the low for today, October 14th, hit a low of 50 cents. So hopefully I'll get another contract at 50 cents, but maybe not. And so, that's just my strategy, is just dollar cost averaging. And, before I get into unusual whales, I did just want to pull up, the options table here, looking at calls. And so, just considering like the open interest, about 20,000 here for the $10 strike for this coming Friday. To me, that's a gamble because I don't think that AMC is going to be squeezing up to $10 a share by this Friday. I don't think it's going to be squeezing up to $7 a share by this Friday to fill that gap. 8,400 open interest in that contract. And then for the $6 strike, it's a little more reasonable, 25,000 open interest. I still don't think AMC is going to be closing above $6 this week, but it could. But I think that's pretty risky. And these contracts are cents to buy, ranging from 4 cents for the $4.50 expiration strike expiring this Friday, 3 cents for that one, going down to 1 cent for the $10 strike. And so I just feel like all of this, right here, short-dated gambling. And so, maybe I look a month out to like November 15th. These contracts, 30 cents, 31 cents to buy for the $4.50 strike. That's feasible. I think price could get up to that level, but it may not. And over the course of the next month, these contracts could fade to nothing. So I feel like this is risky because I don't know that AMC is going to squeeze in the next month. I don't know that it's going to go up to $8 a share or $7 a share in the next month, maybe the next 2 months. But anyways, with that being said, the open interest on these is about, 10 to almost 19,000 contracts open, 18,600 for the $7 strike for the November 15th expiration. Maybe price gets up there. It's 11 cents or $11 to buy one of those contracts. And so, maybe that can 2x to $22 or 22 cents. But maybe it doesn't. Maybe it goes to zero. Because I think that, as we've experienced, AMC can spend a lot of time bleeding or just hanging out in this range. And so I think that, monthly contracts are pretty risky with AMC, November 15th. Don't have, I guess we do have, I don't know if these, monthly for December, although the holidays and stuff, Santa Claus rally, maybe we could be seeing price going up. $7 a share for that strike. The open interest is around 7,000. But this is what I'm talking about with the contracts being bought up that are extremely out of the money. Here we can see the $22 strike, expiration of December 20th. Almost 28,000 contracts open there. To me, that's totally gambling. And so I feel like it's very risky. Maybe AMC goes up a lot by then, but maybe it doesn't. And so for me, I feel like the safe bet is not the January monthly calls, not the March monthly calls. And, I don't want to get into 2026. So, these contracts for June 20th of 2025, I'm interested in those. And so the reason why I picked the $8 strike is because there wasn't a $7 strike, because it looks like it's around $50 to buy a contract, 54 cents here to buy. And so, that's something that, I would be willing to risk with the thesis that AMC is going to be going up towards $7 a share. I think that seems totally reasonable. And considering the chart of that contract, that it went up to $6.50. And considering the chart of AMC, how it went up to almost $12 on that prior big move up, and that we're trading higher than the low that we saw when we were in this depression phase. We hit a low on April 16th of $2.38, the all-time low. We're now trading close to double that at $4.12. And so, I feel like we're starting from a higher floor I think AMC could be going up higher than $12 a share. So I think $8, even though I'm basing it on this gap here at 685, considering the chart, considering the floor being higher than it was before, I think that the $8 strike is very reasonable, giving it 8 months for that to happen. It might bleed more. That's why I only have one contract right now, so I can add more. If I can get a buy at 50 cents tomorrow, I'll pick up another contract. And my average is at 52.5 cents, which translates to $52.50. And then that puts my 2x at 105. And so I just have a limit sell placed at that. I think that's totally reasonable. And so now I'm just going to flip over to some unusual whales data that, I find to be somewhat informative for AMC, but not really. And so part of the reason for that is going to be because of the calls, the volume of the calls traded. It just seems like too many people are YOLOing into this stuff. And I think that thesis should be that a reasonable strike with a far out expiration, allowing time for a squeeze or a big move up, whatever you want to call it, whether it's a MOAS or whether it's just a big move up. I think it could just gradually move up to $8 a share. That seems totally feasible too. But anyways, looking at, the AMC Entertainment, I am looking at the overview for AMC, closed at $4.12. And so we are looking at here, just up here, the data for October 14th of 2024. And we can see that the number of contracts traded was about 73,000 contracts traded today with a premium of over $1 million, $1.3 million. And the net premium is an increase of $114,000. And so I feel like these numbers really don't stand out too much until they get to in the millions. Because if you look up what a YOLO is on Wall Street Bets, it's $10,000. So I think it's completely reasonable to think that there are 11 apes, 11 Wall Street bettors, 11 retail traders, that would buy contracts. So, this could be just 11 YOLOs in that net premium increase. So it, not necessarily that significant. Is kind of my thinking of this. And if we look at, this chart here, the bars are showing the options volume and its call and put volume over the past 14 days. Each candle represents 30 minutes. And so the green is the call premium, the red is the put premium, and the yellow is the underlying stock. As we can see that the stock price has been coming down a little bit since, being up here around, $4.66 on, I believe, September 30th, and then coming down. It's just kind of approximate. It's a line chart. It's not candles. They're not candles that I normally chart. We can see that the prices come down, and we can see that there's just a ton of call volume, a ton of call premium. And so if we look at this, the red here, if I highlight that, you can see the red. That is representing 158,000 contracts. That's the volume versus 911,000 contracts and calls. So way more calls, just an insane amount more. And so if we look at the premium, if we can compare that, we got about 6 million in premium on puts versus 15 million premium on calls. And so, that's a lot of money over these past 14 days, but it's not necessarily telling me that, there's a big whale, there's, something unusual happening. This is just retail buying into AMC contracts, specifically the calls, majority of the calls, almost 3 times the amount of calls relative to puts. And, maybe all these contracts are going to go to zero. Nobody's going to be making money on them. So I think that this data is kind of, you got to take it with a grain of salt when there's a big retail interest in a stock, especially when, it's trading in the single digits. It's not like, you have to put less money down in order to partake. Whereas like something like Tesla, you got to put a lot more money down. So I think it's less retail or less, dumb money in it. It's more bigger contracts, bigger players, smart money. And so I think that you can see more whales, some unusual whales. I like to think of them as blue whales because they're big. They're the largest animal on Earth. And so, you want to be paying attention to those. But with AMC, with GameStop, there can be a lot of smaller whales, maybe like manatees munching on the grass, not necessarily knowing what they're doing. And so I feel like there's a lot of that with AMC. So I think you got to take this with a grain of salt. But then if I do scroll up, we can see here this little bar. It shows that for the trading, this is for today, the 14th, 48% was on the bullish side regarding premium, I believe. So let's see. What was bullish? 634,000. I believe that's premium because it's under this total premium here. And so 634,000 bullish, 520,000 bearish, and about 163,000 neutral. Majority being bullish. But it's not like, it's less than 50%. So take it with a grain of salt. And so I'm not looking too into the general AMC options data because I think you got to take it with a grain of salt. And so I want to look into is just the contract that I'm holding. Now, I got one contract, and I think there's something really cool with that on the chart here I want to point out to you guys. But this is the $8 strike call that expires on June 20th of 2025. That is 248 days from now, so well into the future. So I'm not worried about this going to zero anytime soon. And I only got one contract, so it's not like I'm going to experience a lot of the volatility concentrated with this. I just got one contract, so no big deal. And I can average it down, get another contract at 50, get another contract at 45. No big deal. I'm not worried about it. I'm not sweating it. And I'm not expecting to hold this until June 20th because I think that we will be spiking, like the stock price did, like the chart over here. This is the call option, the $8 strike for June 20th of 2025. I think that we'll probably see another big move like this. And even if we don't, just getting up to here, that's $2.28. Getting up to here, that's $1.69. I like that price. That's more than a 2x from current premium. So I think that this is a really good contract. I'm intrigued by it. It's not necessarily that sexy, though. That's fine. I'm not interested in that. I'm not interested in following what everybody else is doing. I'm interested in having a thesis and carrying it out. My thesis, as you know, is that this gap's going to be filled at some point. And I think it'll be filled before June 20th. And so with that move that we get, whether it's to 685, whether it's to 12, whatever it is, I think that this contract will rise from 50 cents to at least $1 a contract. And that's a 2x, at least. And so if we look at the data here for the day of October 14th, really not that sexy, really not that exciting. We can see that for these calls, the volume traded for today was 43 contracts, so a very small amount. I do make up one of those. I'm excited to show you that. I think it's pretty cool, just looking at the unusual whales data and seeing your own data reflected in it. I think it's pretty cool. So we had the open interest of 3,381 contracts, average fill of 54 cents for today. And the premium traded today was $2,332. So not even one YOLO, So this is pretty, not too exciting. That's fine. I'm not looking for exciting. I'm looking for discount. I think this is discount. And so what we can see here is, these yellow dots, that is the average fill. And so for the most part, it was, average fill around 55 cents, did come down to 50 cents. But not that many contracts traded in that range. But we are down that low. Majority of them were up here. Excuse me. And so for the 14th, this data here, we can see the same data that I just went over above. And we can see that from yesterday, there was an increase of 2 contracts. So nothing too crazy. The lowest fill for today was 50 cents. The highest fill was 55 cents. So, nothing too exciting, nothing too crazy. Majority of the contracts traded today were on the ask side, 79%, meaning that about 79% of them were bought, these calls, versus the other side of that would be about 8 contracts on the bid side, like over here, and 34 on the ask side, 1 mid, being kind of neutral. And so the majority on this is on the bullish side. And so what we can see is at the beginning of the day, this time is central because I'm located in the Midwest. I don't know how to adjust that without adjusting my computer's time. But so this is, 9:20 to 25 a.m., so about 50 minutes after the market opened. We can see this candle here had a volume of 30, and that's 30 on the ask side, 30 contracts. And so I can actually pull this up with my calculator. We can do the math here. So if I do 30 contracts times 55 cents, which is 55 cents times 100 shares, or 55, that equals 1,650, and that's what we get here. So that makes total sense. I am in line with that. All right, so anyways, just wanted to point that out. And here we can see this puny little candle here, ask 1 on the ask side, at an average fill of 55 cents. And I am proud to say that that little candle is my little buy. That candle premium, $55. So right now, I am risking $55 betting that AMC is going to go up towards, not necessarily to, but towards $8 a share. And whatever kind of volatility is behind that, the premium of this contract, I think it's going to go up to at least $1.10. And so that's a 2x. But if I can get more as it goes down, as it fades, that's great too. I'm only going to do 1 contract at a time. Not a big deal. I am not a big fish. Maybe I'm a manatee and I'm just nomming away at this, and it's not going to go up to 8 by 6/20 of 2025. Maybe that's the case. But I think, looking at the chart here, I think it seems pretty likely it's going to 685. And so what I am probably going to do for myself, I'm probably going to add to that contract, to that position, whenever it dips. 1 contract at a time, stacking these calls, nothing too crazy. And maybe something that I'll do is, maybe I'll venture into some other ones. The $8 strike is at 54 cents right now to buy. But maybe as price goes down, maybe the $5.50 strike gets closer to $50, and maybe I get one of those as well. And I could definitely see the price of AMC going up towards $5.50, no problem, by June 20th. And so, it might not be that exciting, but I feel like this is a nice strategy for a 2x swing at least. Maybe it even goes up for like a 13x, like it did over here when we saw it go up to $6.50. That's pretty crazy. But I'm not counting on that. I'm not expecting this to happen because this was more than a year out before the contract expires. Now we have less than that. Now we have about 8 months. And so, I'm just going to wait and, I'm going to hold the shares that I have. I'll add some, if I want to. My thesis, as I've talked about, is that price is going to come down to $3.50. If it doesn't, that's great. But if it does, I'll add to my share position. But in the meantime, I'm going to be stacking these calls because considering the strike is $8 a share, which fits the chart here, I don't think it's so out of the picture like a $22 strike. We haven't seen that in 2024. So, I feel like that's risky. But an $8 strike, I think that's feasible. And I think that's feasible to happen before June 20th. And I plan to exit these calls, taking profits around 2x. Whereas my shares, I'm going to hold them for more than that. And you could also think too, though, and I should have mentioned this at the beginning of the video, options are very risky. So I am not recommending options. I'm just documenting what I'm doing because it's helpful for me, and maybe it's helpful and or encouraging for you. I don't know. But you could also think about this as price is trading right around $4 a share. If price does go up to $8 a share, that's about a 2x. So maybe that's less risky because there's no expiration with it. But for me, I have a hard time wanting to sell shares at a 2x because I think price is going to go much higher than that. But this contract, it expires. The clock is ticking. And so I'd be happy to accept a 2x on this. I'd be happy to accept a 4x on this, or maybe a 13x. And, as I stack these, as it continues to fade, if it does continue to fade, if I stack enough, I'll trim higher than 2x. Maybe I'll trim at 2x. I don't know. I'll probably do updates like this on a weekly basis because this is something that I find compelling. And I feel like it's a level up from just buying and holding shares. And I think it's a level up from buying short-dated, extremely out-of-the-money calls, like the $22 strike that, it might not be short-dated because it's December 20th expiration. But $22, I don't know that AMC is going to be at $22 a share by December 20th. I think it could be at 7. I think it could be at 12. But 22, I think that's risky. And so I think doing a contract that is has a reasonable strike of $8 a share 8 months from now, I think this is going up. And so I just wanted to share that, and I'll probably be doing weekly updates like this, maybe more so, probably shorter videos. I'll try to ramble less, but I just wanted to explain my thesis that if price does come down towards 3, not only will I get more shares, but I will be slowly stacking these contracts because $4 is closer to $3 than it is to $7 or $8. And so I think that there's a lot of upside potential with these calls. And I think that we very well could be seeing a lot of upwards momentum towards the end of the year. And I want to capitalize on that, whether that's in shares, whether that's in calls. So I just wanted to share my thesis. And I hope it's helpful for you guys. And if you do enjoy this kind of video, please do let me know in the comments. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching, and take care, you guys. Cheers.